W-2. If in your business, you may also get 1099s. So be aware of that last part, that you want to be putting some money aside. In season 5, Francis and I talked a lot about this on cash flow, that when we get money in our business, we put aside a portion of it to make sure that all of our taxes are going to be covered. So that's just something important to keep your mind on as a business owner. The second thing as a business owner is when you pay certain people money. And the way to think about this very generally, and again, this is not tax advice, there are always specific rules. If it's an employee, your job is to get their social security number, get that input into a payroll system, pay them only the amount they should get after the taxes are taken out, and then you have to then take that money that you withheld from them. And here we are back for season 6. I'm so glad you all are here. We're going to spend this season in our brand new studio. I hope you love it. We'll talk a little bit about why I have a Coke machine back here, and I do. But we'll talk about that later, and we may have some more Easter eggs kind of built into things this season. But the important part is that we're going to focus on what's important financially for entrepreneurs in plain English. So that if you own a small business or you're an entrepreneur, we're going to hit on the topics easily, quickly, with good punch, and give you actionable stuff to walk away with and do to become more financially savvy in your business. And today's topic, because like it or not, we're in the season, is taxes. And I just want you to think about this for a minute, because as you get more successful in your business, the expense that's going to become the biggest expense in your business is taxes. And it's kind of the biggest expense we tend to never ignore. So today I'm just going to focus on a very narrow portion of this, and that is the paperwork you're going to be getting in the mail or via email in the next week or two. And if you're an employee of a company, you'll be getting a W-2 or maybe more than one. And if you're a contractor of a company, you'll be getting a 1099. And we'll talk about the difference between those if you are one of those. And the second thing we'll talk about if you own a business is what your obligations are around employees and contractors when it comes to taxes and what you have to do. So let's just jump right in and start with the employee side. If you are an employee of a company, what happens is when you're paid, before you get your money put in your bank account, the company takes out what's going to be owed to the IRS and to your state government and anybody else who's a tax authority, and you get what's left over. So you know, going forward, you don't have to worry that someday somebody's going to jump up and say, hey, you owe taxes. Now, this is not tax advice, because of course there are a ton of subtleties to that. But if everything's set up the right way, which it usually is when you start with a new employer, then you're not going to have to worry. You can spend that money on your life. You can save that money if you want to. You're not going to get taxed on it. But if you get what's called a 1099, and it's usually 1099 followed by some letters. It'll be NEC or MISC or INT. You may get a few 1099s. The important thing about 1099s is, for the most part, again, there are exceptions to the rule, but for the most part, when you get paid by somebody and you're what we call a 1099 contractor, they're not taking any taxes out and giving it to the government on your behalf, usually. So what you need to know, and I'm going to demo this on a whiteboard here in a minute. What you need to know is you need to set aside some money, or that'll be a nasty surprise. So as an employee, the employer's making sure you only get what's left to actually spend. When you're a contractor, that's not happening. They're giving you all the money and saying you handle it however you want to handle it. So I'm going to do a little demo of this here on the whiteboard now. All right, so let's jump in and talk about the difference between W-2 and 1099. And just to go back and kind of re-emphasize, generally these people are called employees and these people are called contractors or outside consultants. Contractors or contractors? Interesting. Not sure about that. Anyway, it doesn't much matter. So now, when you're an employee, let's say we're just going to take an example where you're getting paid $1,000 for something. So as an employee, you're getting paid $1,000. As a contractor, you're getting paid $1,000. That's how much money you've earned and are going to be ultimately rewarded for whatever work you've done. If you are a W-2 employee, they're going to say, okay, based on what this person's told me about their tax situation, I'm going to take $250 out of that paycheck before I even send it to them, and I'm going to send that to the IRS and the state on their behalf. And I'm going to hand the employee $750, which goes into their piggy bank. This is going to be a piggy bank. That's a pretty sorry looking pig. But this is going to have $750 in this case. Okay? All good. You can go spend that $750 on whatever you want. House and car and living or savings. Anything you want. Okay? So that's easy. You don't have to worry about anybody coming back and taxing you. That's all been taken care of. This is all your money. Now, if you're a 1099 employee, as a general rule, whoever's paying you that money is not going to take that money out for the government. So that $1,000 is going to go directly into your piggy bank. I need to draw a better pig.
Swirly tail.
Swirly tail. There we go. That's still a bad pig. Yikes. But that whole $1,000 is going to go in here. And you've got two choices. You can go spend all that money on all the same things. And then down here at the end of the day, you're going to get a very nasty surprise when the IRS knocks on the door. You have zero left, and they're going to say, you owe me $250, because that doesn't go away. You still owe that money. So what we recommend, if you're a contractor, is that instead of putting $1,000 into your piggy bank to spend, you put a little bit of that money. Wow, my pigs are really bad. I'll work on that. You put a little bit of that money into your regular piggy bank, maybe $750, just like over here, but you take $250 of it and you put it in a bank and you leave it there. Because then you know that when the IRS comes knocking, they're not going to find zero. They're going to find your $250. You'll be able to write them a check and everybody's happy and the debt goes away. Okay, so that covers off for what to do if you get a 1099 or you get a W-2. If in your business, you may also get 1099s. So be aware of that last part, that you want to be putting some money aside. In Season 5, Francis and I talked a lot about this on cash flow, that when we get money in our business, we put aside a portion of it to make sure that all of our taxes are going to be covered. So that's just something important to keep your mind on as a business owner. The second thing as a business owner is when you pay certain people money, and the way to think about this very generally, and again, this is not tax advice, there are always specific rules. If it's an employee, your job is to get their Social Security number, get that input into a payroll system, pay them only the amount they should get after the taxes are taken out, and then you have to then take that money that you withheld from them, which is why it's called withholdings, and send it on to the IRS and the state governments that are involved with your company. In addition to that, you have some employer taxes that you have to pay for each one of those employees. So I want to be really specific here and explain to you exactly how that works. Okay, so if you're an employer and you are paying an employee, we're just going to use a money example here so you know what your responsibility is. Say that employee's salary is $1,000. That's a given. You're going to tell the system, your payroll system, I want to pay that employee $1,000. But here's what happens. When your payroll system runs, it takes $250 out. And that goes to three places. That goes to Social Security. That goes to something called Medicare, which you may have heard of. A portion of it does. And the rest is what we call federal income tax. So while you're going to send all of that to the IRS, it's broken down into three parts. And just for rough numbers, and again, these are not exact, about 6.2% is Social Security and about 1.8% is Medicare, and the rest is federal income tax. These are always the same percentages. You don't have to calculate them. The payroll system's going to do it. I just want you to be aware of this. Because let's say that of this $250, and I'm not doing specific math here, okay, this is very, very rough. let's say that we'll call it $17 is going for Social Security. They call that FICA as well. And let's say that $3 is going to Medicare. And the rest, so $20 is going those two things. The rest of the $230 is the employee's federal withhold or federal income tax. So you're going to send them the whole $250, but this is how it's getting split up. Well, why is this important to split up, Pam? It's really boring. And you're right, it is boring, but here's why it's important to split up to you and why you really want to understand this. You want to understand this because these two items here are only half of what the government gets for that employee's Social Security and Medicare. You have to then contribute an additional $20 to the IRS along with all of this that you're collecting from the employee. So whatever the sum of the employee's Social Security and Medicare is, and the payroll system does all this math for you again, you have to add on to what goes to the IRS. So when we look all the way through this, you started with an employee who made $1,000. You're going to take $250 out, or your payroll company's going to take $250 out and put it aside over here. They're still going to take that money out of your checking account, mind you. It's just not going to the employee. You're going to give $750 to the employee, and then you're going to add another $20 to this pile over here for your share, and then you're going to send the IRS $270. So when this is all said and done, even though your employee's salary is $1,000, it's costing you the $1,000. You're going to take that $1,000 and you're going to give $750 to the employee and $250 to the government, but then you're going to give the government another $20, $270. So it's really important to know when you give an employee a salary to add on for your budgeting the fact that you also have to pay another certain amount over and above whatever salary number you give the employee. And they don't care about this $250. Or I'm sorry, about this extra $20. Doesn't come out of their pocket. So this is something you really, really need to be aware of as an employer. Okay, so that's one important thing to understand as an employer. You're always going to pay a little bit more out of your pocket than just the employee's salary. But that's your responsibility when they are an employee. Now, the second thing you need to know is you are the one who has to issue these two reports that I talked about at the beginning. You have to issue the W-2 and you have to issue the 1099 to any of your contractors. So how do you do that? One piece of information you want to make sure you collect before you pay anybody anything, and that is their Social Security number, or their EIN it's called, which is a federal tax number if they have a company. Usually the EIN is going to be the contractor and the Social Security number will be for employees, but that can mix and match a little bit. The reason you need that number is because by January 31st of every year, you're obligated to send, for every employee, you have to send them a W-2, and for every contractor who you've paid more than $600 for most services, okay, there are a whole bunch of exceptions, but for most services, you have to send them a 1099. And if you don't, you're liable to the government, the IRS and the state, for having not done that, and could have penalties and interest and withholding charged to you that under ordinary circumstances have already been paid to the government. It's a bit of a racket, but it's reality. So make sure that you know, or have somebody who knows, that that has to happen and gets those filed for you. Because what happens is you don't just send them to the employees and the contractors. You take a copy of all that, or this whatever system you're using takes a copy of all that and mails it to the IRS and to the state government, because they use that to make sure that whoever you've paid actually includes that information on their tax return. So here's what could really bite you. Say you pay somebody $6,000 and they report it to the government that they've been paid that money, but you haven't issued them a 1099. Now the government can come to you and say, why didn't you issue a 1099? And they can make you liable for interest and penalties, even though that person already paid their taxes because they took it out and paid it and handled it. There are a whole bunch of rules that are stacked against you if you don't comply. And it's as easy as just making sure you have a bookkeeper push the button, or your tax accountant push the button to get those out. However, it's only that easy if you've collected the key information ahead of time, which is the Social Security number or the tax identification number. And I'll tell you, we run into this with our clients all the time where they're not doing that. They're not getting that information. We get all the way up to January 31st trying to get somebody we paid way back in February to send us that information. They don't do it. And then you have to report to the IRS without a Social Security number. And if you do that enough times, you're also going to get flagged. So what I do as a rule, one of the first pieces of advice I give a client, and I don't care how small they are, because the IRS doesn't necessarily distinguish between small businesses who can't afford it and large businesses who can, is I tell them you do not pay somebody until you have their EIN or Social Security number. And usually the first time we do the year end with somebody, there are a few people that haven't given us the information, and that's when we say, you know, hey, from here on out, we're not paying you till you send us this information if they are somebody that you pay over and over again. A lot of times it's only somebody you've paid once, and then you're stuck. You don't have the information, and you got a little tally mark now at the IRS saying, there's one you didn't send us the information, the right Social Security number or EIN for. So that's it. It's just kind of a reality check on the IRS. Now, here's the really good thing about the IRS. If you just comply, there's no punishment, right? You're doing your best. You've shown you've done your best. You've put the Social Security numbers on, the EIN's done, and you've reported on time. Your hands are clean. It's easy. It's one of those things, like so many things in life, right? That if we just do it at the right time and capture the information ahead of time, then we're in good shape. It would be like my wife telling me, just put every dish in the dishwasher as you go so that you don't have to come back at the end of the day and load everything into the dishwasher in the last 5 minutes of the day. Same theory. All right, so that's my little mini lecture on taxes. I may do a little bit more on taxes, but for the most part, we want to keep things entertaining. Next week, we're going to dive into another topic that I think is really important to all of you, and that is what are going to be some of the implications of national policy decisions that are being made. So be sure and tune in for that in the meantime. If this has been helpful to you, wherever you're listening or watching, please like, subscribe, drop us a comment. We're very interested. If you have topics or questions that you'd like me to address, definitely be sure to do that. And if you're listening to this podcast and you'd like to see the video of what we did on a little whiteboard here to explain things, make sure you pop over and see us on YouTube. Welcome back to Cash Flow Season 6, and we'll see you next week.